Hello and welcome to this video. In this video we are going to talk about a few different things. First of all, we are going to look at some currency strength stuff. I've had a couple of questions come in regarding currency strength on various time frames, and then we are going to do a top-down analysis on a couple of pairs, and I'm going to introduce the utility I spoke about last session and tell you where you can download that to use that. Okay, so let's get started. Okay, if you recall from my previous videos, you'll notice that I have my currency strength dashboard which looks like this, and then I have a price chart on the left hand side. So what I'm doing here is I'm focusing on this information on the right to tell me what to trade. Then I use the supply and demand software here to tell me where to trade, where as in which price levels. And so if we have a look at the configuration here, we'll have a look at the top one. This is my long-term currency strength information, this is my medium term, and this is my short term. And this up here, if we have a look at the setting, we are looking at currency strength now compared to currency strength at the beginning of the week. So what are we on? We're Tuesday today, so about 1.5 days so far. So this is the development of currency strength since this week started. Here we have currency strength now compared to currency strength the beginning of today. So we have about 13 hours of price information that the analysis is performed on. And here we have something a little bit different, and this is the currency strength relative to the currently active session, which for me is, we're at 2 o'clock, we are in late European session. And so this is what you can see here. So we have, see the Canadian dollar is picking up in strength throughout the course of the session. And we have the euro, which is kind of towards, it's actually the weakest one, or the weakest traded currency this session so far. And so here you can see that I have a really good overview over the different currency strengths in relation to one another. And this is crucial in relation to one another. And so while you can have a very strong Japanese yen in relation to one currency, it might be very weak in relation to another currency. And so you're not always going to be buying Japanese yen across the board. You're going to be sometimes buying it in relation to another currency which is weak relative to the yen. Okay, so that's what we have over here. And if we look at this and we have a look, and you can see, what do we have at the top here? Well, we have this week so far, we have the Japanese yen, which is looking pretty strong. We have the Australian dollar, which is moving down. And this is actually since the beginning of the week, since the beginning of today, and since the beginning of the European session today. So if we drag the Australian dollar, Japanese yen over, this should be moving lower. You can see, yes, indeed, it seems to be moving lower in a hurry. You can see here it's looking pretty, it's falling very quickly. And if we have a look, what we need to do before we do anything at all is we need to look for opposing areas of supply. And you'll notice here, let me just expand this. If we do our top-down analysis, you can see that we are actually feeding off of this monthly supply. See, price has been stuck in this area here. We tested it once, we went a bit deeper. We went a little bit shallower, and now we had a really strong release, and now price is starting to move lower. And so this looks like it's going to continue down into here, potentially down to the lows here or around here. And so prices probably continue lower for a little while. Keep in mind that we have, for big positions, you're going to be paying enormous interest rate swaps. And so the smarter money is going to be aware of this, is going to be maybe hedging against this, because this can be very expensive. So if we have a look on the other time frames, you can see that we can very clearly draw our downward sloping trend line. So we have a weekly downtrend. We have a, let me just draw it in for us. So we have a high, this is a low, price left the first high, went down, went to the second high, which was lower than the first high, and then price moved below here. What does that mean? That means that we have supply and control and demand getting consumed by the opposing order flow. So we are in a very clear downtrend. So what does that mean? That means you want to be selling. You go to the daily chart, and you can see that we have this low we need to move through, because this is going to provide some support for price. And so we want to be aware of that. And if we have a look in here, you can see that we have a high. Let me draw these in. we're going to draw this so we can see it very clearly. So we have a, just go like this. And so right now, the trend line goes like this. We have a high, we have a high, we have a low, price went below there, we traded below that level. So this is here. We can't go from here to here until price moves below this low, which it has not done. Okay, so this is what we have to work with down here. So we are actually in a what? We are in a bearish consolidation, which means that we are still in a downtrend, but we're having a bit of a breather. Keep in mind that we do have this trend line that's been broken. The area, I'll just draw it in here. It's going to go like this. The area of demand that broke the trend line is this one down here. What does that mean? Well, that means that we're probably going to have a bit of a bounce at this area, which is also the big figure. So you've got to be careful about selling just yet. You could certainly do it intraday, but longer term you want to be a little bit careful because price is probably going to have a struggle moving through there. If we go to the smaller time frames and have an even closer look, you can see that we have all of these nice rectangles are above price. What does that mean? We have supply and control. That means no buying, don't buy, don't buy. If you're going to buy, you want to certainly be picking the very lows of here where we know that we have lots of black space just below price. So we have this price is dropping. Let me enable a feature here. It's consumed, good. Let's delete this. And I've got like an update as well to this supply and demand indicator, which is really exciting. And I'll tell you about in just a second. So prices moving down. We broke this. The origin of this trend line break is here. Ideally, when price leaves and breaks a trend line, you want it to move above one of the points of the trend line, which did not happen. So that's telling me that we're probably going to continue moving lower because this lovely area of 4-hour supply managed to cap price. Again, I just want to underline how powerful these areas are. Look at the precision of these entries that you're getting. So this is a 17 pip area of supply. Price came to it probably -1 pip, and it just kept going. I mean, look at the risk reward on this trade alone. It's absolutely phenomenal. If you didn't get the first one, you get the second one. We have a really nice area of liquidity distribution. Price leaves, we come back up to the origin of this, and then price just goes down. Unbelievable, unbelievable, unbelievable. I love it, I love it. Anyway, price is wriggling lower from here. And if you look at this, it's a real mess, isn't it? There's nothing really in here to do. Despite that fact, these levels are being supported. Sorry, they're holding. This one did at least, and then price seemed to have moved lower from there. But I mean, if you keep in mind the fact that we do indeed have some serious strength on the side of the Japanese yen, at least this week, I mean, it gives a very clear picture of this when you look at a supply and demand chart like this. Okay, so if you go to smaller time frames, you know what I'm going to be selling, and you want to look for very clear areas. Here we have 1-hour areas of supply. We have the 4-hour area here. We have this 4-hour area which was tested. We almost came to the 1-hour area, not quite. And you see prices just keeps moving away. This is a pre-qualified, well, it's not qualified, it's in the process of being qualified, hence the dotted lines. And price left very, very quickly. And so, I mean, there are a few things to do around here. You could certainly target this area for an entry. 13 pips. That's a bit of a position size, 565 lots. There's one for Elijah there. But you can see that I mean, price left that area very, very quickly. But you also have to keep in mind where price has been back to since the release. And if I look at this, this is not nice. Price is just wriggling all over the place. It's slowly drifting lower. But price pulled back to the high of this pullback, which is the 83.15. And so this is kind of where kind of the sell zone begins. And above that, we have a small continuation pattern here. And we have this one up here as well. And so these are ideal areas to look for a sell. This one you could consider. I don't think I would take this one simply because I like this one. It's closer to the origin of this move here. And then prices seems to be drifting lower from there. Intraday, you could certainly start looking here. You go to the 5 minutes. Okay, before I go any further, keep in mind, what are we doing? Are we buying or are we selling? We are certainly selling. How do we know this? We have strength information. We also have a greater period analysis of supply and demand. We know that the major order flows are moving lower. And so on a smaller time frame, you can short this all day long because you have the insight from the higher time frame and the major flows, parentheses, currency strength in mind. And so you're making really good trading decisions. You go to the small time frames, a 5 minute, you can see these all over the place. We have this nice little price nodule here. Price went up. We're filling some short orders and then price dump. Where did price go? It fit into this area of supply. When price, this supply, because this is fresh supply because price traded sideways, then all of a sudden price cut away. That says this is fresh supply. Price tested it and now price is going down. And we have a few continuation patterns on the way down. And on the 1 minute chart, if you want to go there, you can see these a little bit clearer. And you can see we have all sorts of tiny little areas of supply just above price. We have these one up here, which has been tested. This one is still untested. And we have all of these down here. And so keep in mind that you know that you should be selling. We know the reasons why. So it's just a matter of jumping in at the area of supply that is closest to price. We have this one here, which I like, because why is this interesting? Because when price came close to it before, we left very quickly. When we left this area of supply, excuse me, we moved below this low. We came up, we came close to this one, and then we moved away from there. And so this is interesting to us. This is also potentially interesting, but what I don't like is this one here. This kind of cleared liquidity just below this area before price came up to here. So I probably wouldn't do anything until price came up to here, but I would certainly look at this this here. Yeah, so that's what we have there. I mean, that's kind of the essence of currency strength. If we have a look at another one, what else do we have here? We have the American dollar, which is moving higher, and we have the Australian dollar, which is to the downside. So if we look at the Aussie dollar, let me clear that, Aussie dollar, this should be moving lower. Yes, moving lower very clearly. So if we go on a daily time frame, I'm waiting for price to come up here so I can sell it. We haven't quite gotten there yet, but we're approaching this area of weekly demand below. You can see. So this looks interesting. I got something down here. I'm looking to trade. Price is not there yet. We're probably going to get a reaction here. I'm hoping that price comes into here. This is my logic behind this. I'm hoping price comes into here and then moves back up to here somewhere and then continues down to here. The reason I didn't take this, I'm not going to take this, is because price came lower to it. As a matter of fact, this is not demand. This is a reaction to demand, which is here. So this is the real demand, which is why I would not buy here. You certainly could on the smaller time frames and get away with that just fine. But this is the demand. This is a reaction to demand. This is a child to this reaction to demand. And so I like this one better than this one, because this is kind of like just price coming down and then leaving, and then price came down, we see a bit of liquidity, and then the gun shot out. You see how quickly the train left the station there. And then when price came back to this area before, we had a really big run, moved above this high. You see this one's gray. It's been grayed out. It's seen a higher high since then, and now price is drifting lower and it's returning to that area again. And so what you could do is you could do something like this. You could kind of have a look at this area here, or you could drill down into this area here and see if there's something inside there that might be interesting. Keep in mind that this pair is moving lower, so we have some serious flows pushing price lower. So this is like fundamental information, data that is driving this currency pair lower. So strength to the dollar, weakness to the Australian dollar. Yes, but you can see here that we have Canadian dollar, which is really low, and it's starting to turn up. Here it's starting to turn up. Throughout the course of this session, as a matter of fact, we've been moving higher. So if we have a look at that to one that has been high and turning lower. So we have the CAD Swiss franc. So this pair is probably beginning to turn around. So if we go to the CAD Swiss franc, this should be beginning to turn around. Let's go back to the strength. Okay, so the CAD should be beginning to pick up strength. So if we have a look at this, this is the daily chart. So if we have a look at when this happened, this cross, this was today at about 1 o'clock. So we have a look here today at 1 o'clock. Yeah, so now we're starting to move high at the bottoms here, and you can see last time price came down to this area of demand. It left very quickly. We need to go a little bit deeper. There's a big rejection there, and then we're going to have a look. We have accumulation, accumulation, accumulation. Price left. So we'll take the lowest one. Just to be on the safe side, we'll have another look on a smaller time frame. Let's have a look. Man, you can see. We'll just leave it at that. That's pretty clear. You can see how price went down. We have the bodies here. Price moved up. Price went up, and then it cut away from here and here. So this is fine. And so now you can see on the strength what's happening. The CAD's picking up, we're turning around, and the franc is going down, which means that this is drifting higher. So now you go into your smaller time frame, and you start to look to buy on the smaller time frames. Now you're not going to be holding these for a day, because clearly there's a big divergence in the strength between these two, but we are trading a correction here. So you go to the smaller time frame, 5 minute, 1 minute, whatever, then you can start buying dips up until price reaches opposing areas of supply. And these do not have to be significant at all. We just want to see opposing order flows. They're going to be places where we're going to want to get out of this trade. And this is looking like it's going to pop up. You can see how it goes up, and it's kind of sticking just below this area. And so price is kind of gnawing away at this area here. It's a very nice release, but this is a 5 minute area of demand, supply. We react on 1 hour demand, and so there's greater order flows to the upside on this time frame, not just because, but because we're reacting at this, a very price sensitive area. We've seen that historically, I mean very much so. And price is just having a little bit of a revisit. And so price is touching the same price level close to the 7,700, the big figure area. And now we're going to start drifting higher. And so we'll probably come up into these micro areas of supply before we continue lower. And here we have a nice drop, extended area of distribution here, and then price moves away. And you can see price left, and it came back. What is that doing? It's pointing to the edge of the area, which is about there. So orders to sell at the 77.45, or take your trade off when you get around this area here. So that's what we have there. So you can use it like that as well. It's a very versatile tool. Let's look at another one. What else do we have here? we have the yen, which I like, is pretty strong, and we have, the euro is starting to turn down up here. It's been pretty weak. So let's look at the euro yen. So the yen is strong. The euro is weak. We're moving lower very clearly. First, we have to find out where we are in the big picture. We could easily go lower from here. I like that. We have this, which has been tested once in the past. We're coming up for a second test. Keep in mind we're at the big figure. This is important. So we have this right here. Keep in mind we've been back to this level here, so we have to look in a smaller time frame and see what it is that price did when it came back there last time. Let's go scroll back. Here it is. You see we tested this area here. So price came up, we tested this area. This was the initial pullback after this was formed. Then it left. So this was telling us where the edge of the area is. And if we just go right to the low, let me go all the way over, just see how close we were to that. have to go to the daily maybe. Look at the low of this candle. Oops, sorry. The low of this candle is 127.56, and this is, I can't even read it, 127.46. This is 10 pips lower than the low of this, and so this kind of tells us where the edge of the area is. Price came back to it, and so we've had a first reaction here. So this has been tested once, and then we have a lot of wicks in here, which is telling us that the demand is below. This is price feeding into demand. This is not demand. Okay, so whenever you see wicks like this, this is pointing that these should be viewed as arrows, not as demand or supply. Compare these to this here. We have a much smaller wick. We have a super clear pattern. What do you do when price comes here? You load the boat and you sell. This is a very clear sell pattern here. Where? At weekly supply. So this is the first test in the weekly supply. Price could easily come back up here, poke into here, and then dump lower from there. We have another really nice area of demand. We have this one here, which is below these wicks. This is the wicks kind of pointing to the edge of the poor liquidity. This is just reacting at resistance becomes support, you can see here. But the order flows are down here, and this little price nodule here. So this is where we're gonna have a look, see if we can get a bit of reaction down here. Yeah, we'll see about that. This is like a swap long is like almost just over $8.50 per or euros per standard lot. I mean, that's a lot of money. So we don't want to hold that for too long. Let's see if we can get out of there, get a quick reaction on the first day and be done with it. But pressure's coming down here. Ideally, you'd want to do something like this. Get in here. It's gonna, you see, price went up. It opened, it went down, it went up. So here we have something in here, and so this would be the better trade. I wouldn't touch this. I would feel much more comfortable going below the lowest retest of this area, which is down here, so the 127.50 area, 110 pip stop, perfect, and then kind of buy it up for a little while until we find the opposing supply just there. Okay, I think that's enough about that. And now I want to show another utility that I've just written, which is really interesting. If you're into your four currency pairs, your four time frames, we might have, for example, the weekly here, the daily here, the hourly, and the 15 or the half an hour or whatever here. And often you have, I mean, if you want to look at 4 different time frames for the same pair, then you'd have to go move it here, then move it here, then move it here, then move it here, which is a huge pain. But I've made a super simple tool, Pipnotic period changer. You simply drag the pair, you attach the indicator onto a chart, then you drag your pairs onto that chart, and it'll update all of the other ones. Okay, so now we have, damn it, I missed my entry on this. I can see just by a fraction of pip. So price almost got there. Anyway, never mind. Let's see, just do that. You see, and now I can see weekly, daily, 4 hour. Sorry, weekly, daily, 1 hour, and half an hour. That should be 4 hour, and this should be 1 hour. For the same pair without having to drag it onto 4 different charts. And so it's just a really interesting and an exciting tool. So I encourage you to have a look at that if that's what you're into. If you want to try that, I'd really encourage you to have a look at it. It's for free. Give me 1 second and I'll find it. If you go onto the Pipnotic website, you go to downloads. You can see right here, Pipnotic Period Changer MT4. And there's a little video which has terrible sound. I apologize for that. I'll have to redo the video. And you just download it here and then drag it into your indicators folder, and then attach it to the chart. It's really nice, and it just speeds up the whole process. Then you can do stuff like this, kind of like, okay, where are we? Oh, cool, we're reacting at weekly supply. Good. So it gives you a really quick rundown of what's going on. Super, we're reacting at weekly demand here. You can see here all these different time frames, so you can time them just right. It's going to move through them like so. Looks like we just got filled on something there. Yes, nice. So you can see here, it just makes it so much quicker. See, we have this area of weekly demand below price. We have price moving higher. We're having higher highs. And so for the time being, we can expect price to wriggle higher, at least until we get to here. This looks like it might give us some issues, but keep in mind that we have these boxes formed below price, and so price is probably going to have an okay time at wriggling through this when you see this going on like so, because you can see that we have an interest in supporting the American dollar, Canadian dollar. Interest rate swaps are long as well, which helps. And it just makes it so much easier. And so you're not like just looking at this, I wonder if I want to be buying or selling. Always start here. Should I be buying or selling? Well, as a matter of fact, very shortly I should be looking to buy. Why? Because we're reacting at monthly, weekly areas of nested demand here. And so you wait for price to come down into it, and then you can just find your smaller areas, your micro areas of demand within these major areas here. It's super quick. Okay, and just enables you to scan the pairs very quickly. See, just like this. So if you have 28 pairs to go through, then so be it. No worries at all. See, just like that. It's super quick. Very quick, very easy. Good. Okay, I'll leave that for now, and I also want to show as a final thing a update to the indicator. Okay, so minimum percentage of range. I've added these two parameters, and I'm not sure if they'll be visible or they'll be invisible on this next release. What I'm hoping to do is to find an optimal setup and leave it at that, so you don't have to worry about these new settings. But what they are is, in previous versions of this software, the indicator was qualifying all areas of supply and demand, and it wasn't scrutinizing them based on the size of these areas. And I found that while a lot of these areas were holding, some of them, the smaller ones, weren't holding as good. And so what I've done is I've made an algorithm that is going in and it's scrutinizing the size of these areas of supply and demand. And so it's looking for, it's averaging the range of this pair for this time frame. So it's like a sliding average that's moving along as price develops, and that'll of course go up and it'll go down. And it wants the size of these areas of supply and demand to be 40% of the value of 13 periods of averaging for the volatility. So this will enable us to ensure that the areas of supply and demand have certain sizes, and so we're not just looking at tons and tons of different areas. And you can see here there aren't going to be a whole lot. We have this one down here, which is a nice one. Let's find another pair. Actually, I think it was $1. Oops. Let's go to this pair here. So here you can see that we have some areas here that are looking pretty interesting. We have this one up here, which we know is clear, it's qualified due to the pattern. We have this nice area here, which was tested twice. Price went down. We formed this nice little area of supply at the edge of this daily area. We had this nice rally, accumulation, distribution, drop. This area is nice, and this has a certain size in relation to the volatility of the candles in the vicinity of this area of supply, which is important. So we're continuing to do this, and you can see that we're getting fewer areas, but the ones that we're seeing are a lot better. And I'm liking that a lot. 99, that looks like a robot trade. We'll just pull that off. And so I'm really seeing a lot of positive results after having implemented this, and I'm actually finding myself simply trading these areas blindly more than I have done in the past. So now I'll just simply go like this, box that off, and I'll sell once price gets up into the area. I'm finding that I'm getting much better results, which is exciting. And so I'm just testing it. I should be finished relatively soon, and once that is done, I'll get that pushed out, and I think you'll all find that to be quite a lovely improvement. I still haven't decided if it's going to be, if I'll expose the configuration options potentially initially, but maybe try and remove them. I don't really like exposing too much of the settings, because it just has a tendency to confuse people, which I don't want at all. Yeah. Good. Okay. Well, I think I'll leave it at that. A small update regarding the algo trader. It's coming along. I got a couple of guys working on them. I've got a gentleman working on the supply and demand, giving me some feedback on that version, and I have another gentleman helping with the currency strength trading robot. And so this is kind of an ongoing process, but I'm hoping that we'll be able to refine the process and get something that really works. Then you can the whole purpose of doing it is that you can throw it on your terminal, you put it on a demo account, and then you can watch it trade, and then potentially mimic trades on your live accounts if you think that the trades that the robot is putting on are okay. But it's more of a kind of like a guideline or a bit of a support, perhaps a bit of entertainment as well, when you're trading next to or parallel to your live account. But more updates on that in the very near future. Good. Well, I think I'll wrap it up with that. Thank you very much for watching. If you have any questions, please send them in. Thank you.